Okay, good morning, everybody. Welcome to our ARMR Investing morning meeting. We do this every morning, usually 9 o'clock till the market opens for our ARMR Report subscribers, for ARMR investors. We then start our live stream at 9:30 and we go all day. We're day trading, we're swing trading, and we're building investing portfolios. This is a virtual hedge fund experience. So I ran hedge funds for a decade, been managing capital for 35 years. And what I'm sharing with you is a step-by-step approach of how to not only capture upside, but really manage risk. ARMR stands for Algorithmic Risk Management Research. So we have algos designed to help us with our buy points and our stops. We have a risk management approach. Really, that's what sets us apart. How to manage risk, when to put the capital to work, get on the right side of probabilities, when rewards worth risk. Otherwise, keep your powder dry and wait. And so we have our risk management strategies we share. And then, of course, research. We're always doing research, looking for the innovative growth stocks that can really explode. That's kind of a passion of mine. I've always loved investing in innovative growth, going back, decades now. So that's our focus. It's called the ARMR Investing Way. I appreciate you guys spending time with me. Any questions, throw it in the comment section of this video. I'm happy to answer it now or throughout the day. I'll get to it. Don't forget to share this with your friends. Bring them in. A lot of people have struggled this year. We've had a banner year. We're just making a lot of money on this desk. And it's a combination of really everything. It's the algos that run our big picture macro fund. When we add capital to indexes, we're trading double or triple the indexes on a swing trading basis. And it's a combination of having the whiteboard set up where we know what we want to invest in when the time is right. And when the window's open, we hit it, and those stocks have had huge success. So the best way to kind of get involved with the ARMR Investing Way is to subscribe, of course, to the YouTube channel. We do this live feed every Wednesday for all of you, so you can join us every Wednesday and start getting used to it. And of course, you can go to armorinvesting.com and see what we're all about, see if it's the right fit for you. Before I dive in, don't forget, I say this is a virtual hedge fund. We're running a hedge fund here. You need to think of yourself as a portfolio manager on the desk. What's your risk tolerance? What are your goals? Figure out your strategy. And when the bell rings, you have to execute your strategy. I'm going to share with you what I do personally and what I do for investors when I'm managing capital for them. But you got to figure out your own strategy. Only you can be the smart money of your own assets. You can't just blindly follow somebody else. All right. So this is really, this whole process that I'm sharing with you is designed to help you build eventually your own strategy that fits your risk tolerance and goals, because it wouldn't be the same as somebody else's. Now, I do share the Flagship fund and all that information with ARMR insiders, ARMR Report subscribers, and I'll share it today, what our allocation is. That Flagship fund is a representation of the capital I manage for others, okay? So we have a separate accounts, but managed together, right? So that's our capital structure. And we use the Flagship fund. Anybody who has a portfolio with us is going to get an experience close to that Flagship fund. Could be a little more aggressive, a little more conservative, depending on the individual needs. Okay, but all in all, that Flagship fund's pretty much going to reflect what we're doing here. So I'm going to share it with you, and then the idea is for you to take that and say, okay, how aggressive or conservative do I want to be, using that as like a benchmark. Okay, so first things first, before we get to the fun part of highlighted stocks of the day, we're going to talk about precious metals. We're going to talk about cannabis. But before we get to all that, I'm going to share with you one stock in the Hateful Eight that we're going to want to focus on, all of those things. But of course, before we get to that, it's always important to start with our risk monitor. We have 10 assets, indexes. We have algorithms designed for each. Okay, the volatility components of each are different, so the algorithms designed for each. when all of them are doing one thing, when it's risk on everywhere or risk off everywhere. The only animal that can drive that is institutional investors, okay? So right now, the risk monitor is red. So from Bitcoin to treasury bonds, from small caps to large caps, from weighted to equally weighted indexes, that's what we're looking at. Those are our 10. And right now, what we have at best is a lot of cross currents and no confirmations, a lot of confusion. So we've been risk monitor red for a while. But I said to you guys Monday, even though last week was god awful, I said to you Monday that 70% of the time, if you go back and look 50 years, 70% of the time, this week the market ends up. So it's no surprise the market's rallying. And we've got a bit of a conundrum that showed up yesterday. So this strategy we have here, this is the tip of the spear for us, okay? So we've been trading this strategy. This is not back-tested returns. This is live returns. I've been sharing this with you going back to October 2022 when we first started this particular strategy. It's a very aggressive strategy for trading the S&P. It's a swing strategy. Every time this strategy gives us a buy signal, triple the S&P is what we put on, SPXL. We hold it overnight. The average holding period is 9 or 10 days. Sometimes we get on a trade, lasts for, I think the longest trade was like 28 days. Sometimes you put a trade on, you're out in 1 or 2 days. Okay, so the average is around 10. This has been a highly successful swing strategy. And you guys have watched it. We've done it together. We started at 0. And we said, okay, let's start trading this. The strategy is up over 185% in 36 months. It says 35. I think it's 36 months now. Trade 27 started yesterday. So I had a real decision to make. I said to you guys, I don't like to start swing trades in the middle of a holiday shortened week that's almost always up. And then next week, I would say if this week is up 70% of the time, I would suggest to you next week, at least early in the week, is down 70% of the time to test whether or not the strength this week is real or it's just typical tail wagging the dog, puts being dumped into a holiday weekend, market rallies up a bit, and then the primary trend reasserts next week. So we're really stuck in a bit of a bind here, and let's talk to you about how we're going to handle it. So number one, the risk monitor's red. It won't change until next week, even if this week is good. We'll have to get follow through during a regular week for the risk monitor to change to yellow or green. I will tell you, and I'll show you right here. You're going to see that the S&P strategy and the NASDAQ strategy, you can see the little carrots and you can see all the lines and everything. So risk monitor went red here. This is a 60-minute chart. It went red last week. That was the final breakdown of the risk monitor green that started in April. So we run different swing strategies. So I've shifted now to talk to you about a strategy for swing trading the S&P and the NASDAQ that has a much more lenient stop strategy. So it doesn't hold for an average of 10 days. It can hold for months because of the stop strategy. And it has multiple stops on the way up. That final stop from April was triggered last week. And this is what I want to share with you. When we've been on a trade that long, a significant amount of the time, we'll get a buy trigger immediately after we get stopped out. The final stop will hit, and immediately the market tries to recover that trend. These strategies are accurate somewhere north of 80% of the time. The S&P, we're hitting it at a 90% rate, which is, we could talk about that some other time. I don't think it's going to continue like that, but it's been like that since 2022. Okay. And what I want to share with you is, if these strategies are accurate more than 80% of the time, when we get that final stop hit and then immediately a new buy trigger, the probability of success on that drops dramatically. It might be 50-50, maybe 60-40, maybe 60-40, that this is going to be a tradable rally. It drops dramatically. So I'm really stuck in a bit of a conundrum right now. I don't want to put any money to work. I hate putting money to work when a new strategy starts in the midst of a holiday shortened week. The risk monitor won't change, but we have this strategy here. Okay. We're up over 185%. That does not include holding treasury bills. So we're up even more because we hold treasury bills and collect interest in between these trades. Okay. And what I'm doing here is I'm not going to disturb the integrity of this strategy just because of the type of week it is and all these other things I'm saying to you. So when it comes to the risk monitor, we're going to make ourselves wait for a week and make sure there's follow through before we say, hey, here comes the year-end rally. But when it comes to this strategy, we execute without any human emotion. So we're on the trade. It's simple. The low of Monday is the stop right now. At the end of today, the low of Tuesday is the stop. The stop strategy is simple. It goes up every day to the low of 2 days ago. I shouldn't say it goes up every day. That's if the asset's going up. The asset goes sideways, it's the low of 2 days ago. It stays at the low of 2 days ago. So what we're doing in the flagship fund, or what we're doing in really the macro fund, I've got exposure to the S&P now that I'm holding overnight. I'm long SPXL. But because of all the things I've just said to you, my position size is minor right now. Normal risk monitor green, everything happens at once. I might have 100% exposure to this thing in a portfolio I'm running. Right now, 30% max. I'm going to capture close to 90% of S&P volatility, which is actually conservative, right? It's the S&P, and I'm only capturing about 90% of it. Market goes up 1%, that portfolio will be up 0.9%, right? When I'm max long, I'm looking like somewhere close to 300% exposure to the S&P, 200%, 300%. So less than 100%, it's pretty conservative, but I'm going to follow the strategy as written, and it's going to get my foot in the door. If there's follow through next week, I'm going to be making money already. And that makes it a lot easier to put more capital to work. It's just emotional, right? It's just, wow, I'm already making money. Let's go. If it reverses, breaks down next week, okay, hits the stop, I'm out. It's limited risk, not the end of the world. So step one today, we have some exposure to the S&P. I think it's interesting that the Investors Business Daily risk exposure index that I talked to you guys about on Monday, which was max cash on Monday, flipped today. It was max cash Monday, Tuesday, but this morning they're starting to add capital back. It was 0 to 20%. Now it's 20 to 40. So kind of in line with what I'm trying to say. And when those two strategies line up together, we usually make money. So limited risk is something I'm willing to do right now. Let's talk about where I would go if I decide to add more risk. Well, the first thing I want to say is we like to keep it simple on this desk. And the fact is, a simple strategy that's really paid off for us is that money rotates inside the Hateful Eight. And so we'll always look for the one or two Hateful Eight names. So that's the Magnificent Seven plus Netflix. Okay. It's the Hateful Eight. There's always one or two that have these beautiful chart patterns that are building. And when we get the ARMR algo buy trigger, they demand our attention. It's just a good place to have some capital. I don't always do it. Then I regret it. Let me give you an example of what I mean. Okay. Google was a classic setup on the 200-day moving average right in here in July. We had a cup and handle, ARMR buy trigger, and I didn't put the money to work. I was doing other things. Look, I had a large position in SanDisk, okay? So I didn't miss too much, okay? But I do look at Google and I do say to myself, I can't believe I don't own it. We had the buy trigger. It was on the 50-day moving average. It was a cup and handle. The risk was limited. The risk was limited and the reward obviously was enormous. So what is it? I mean, we owned Apple. We took the Apple trade from here. We made some good money in Apple. It's gone actually up to our target. I'm not a buyer of Apple now, but that's another example of a perfect setup, right? And so today, what I submit to you when I go and look at the Hateful Eight, what is set up today that we have to pay attention to? And it has to be Tesla. We've traded Tesla all the way up, going back to last year. We've been swing trading this thing, you know, I don't know, playing it like a Stradivarius. It's just been perfect for us. Even the last signal here we made money on before it sold off. So I'm always looking at Tesla. I'm looking for that next trade. It's setting up a pattern right below the 50-day moving average. If it breaks out, the ARMR algo buy trigger fires, I'm going to be long Tesla again. And let me just remind you, there's Build-A-Bear. I might own that again for my daughter. She loves that company. Let me remind you on Tesla, the weekly chart, okay? This is a monster weekly chart pattern in the making. Monster. Somewhere in here, institutions are going to break that pattern out. It goes all the way back to the highs of 2021. When Tesla clears those highs, you're going to see a Google-like move in a short period of time in Tesla, because it's just institutional money rotating into that space out of other Hateful Eight names. That's what they do. They're rotating out of Meta. That looks awful. Their Microsoft looks terrible. Okay. Netflix is breaking down. They're going to be rotating somewhere. They don't really take their money out of the Hateful Eight. They just find the next place to settle. They hammered it on Google, and they're going to come after Tesla. That's the top stock for me to watch. If the risk monitor is green, I'll probably own Tesla. Okay, now, a couple of things in the news real quick. Dell announced earnings. Stock is up 5%. Let's see if it can hold on to it. They beat the number. They raised guidance. If that stock works, VRT's at the top of my list. I'd like to own it again. GEV, CEG. We're not going to have AI build out without massive, massive build in power generation. Those are two of my favorite names. Okay. Before I get to the highlighted group of the day, which is going to be Cannabis, let me walk you through our carry trading again. We're having a, we made a little change to how we day trade the S&P, and it's having a massive change on the success of our strategy over the last 7 days. So talk to me at the end of the month. We'll see if it continues, but we're trading the S&P and hedging it with VIX, and it's just opened up a very significant change in our success rate. The idea is to get long the S&P first. We trade triple the S&P or options. Some of you like options. We get long there first. So we're looking for the normal ARMR carry trade. When we get the setup, and that's here, you're looking at a 3-minute chart. So yesterday, the setup was right in here, these green boxes. Okay, we got on that trade. It rallied all day. We ended up taking our position off right in here where these tops are, right in here. You see like a yellow box here and a pink box there. That's when we were out of that trade from entering it here. So we captured a huge run in triple the S&P or options. And in order to be on that all the way up, we didn't sell any of it until we got to the highs of the day here, and then we ended up booking our gains. We're using VIX to hedge it. The beauty of yesterday is we didn't need a lot of VIX trades. We had a VIX trade on early in the morning to hedge the position when we were putting it on in here. We took a small loss in VIX and we just captured the whole gain. But on other days, you'll get a breakdown in the S&P and VIX will skyrocket, and we end up making money net with our VIX position. So VIX is really allowing us to throw our hands at every setup we see and protect if we need to. We're trading at a 5-to-1 ratio. So our S&P trades 5 times larger than our VIX trade. We don't need a lot of VIX. So during the S&P trade, we don't touch it. We have stops and targets, and we don't touch it unless either are hit. We adjust the size of our VIX position to help manage risk and allow for that patience to let the trade perform. And it's leading to some big results for us. So I'll keep you posted on that. We'll keep working on it. Yesterday, we added and maxed out our precious metals position. So we're long SIL and GDX at a max location, a max size, which in the flagship fund is about 25% of the fund. We're long physical gold, physical silver, and then 2 ETFs, GDX and SIL. Okay. Now to wrap up before the bell rings, the highlighted group of the day has to be precious metals. Has to be cannabis. We're on the cannabis couch for a second. I don't know about you, but I know ARMR insiders and ARMR Report subscribers have been making money in the cannabis space since 2020. Go back and look at our YouTube channel. Go back and search our videos. I've shared with you our strategy. We are making money trading. We're not investing yet. We're trading. We're swing trading cannabis stocks with the hope that one of these swing trades turns into a major investment as rescheduling occurs. I shared with you guys back here in July that we were loading up on MSOS under 3 and buying calls. It blew out to 6. We made money on that trade. Okay, we're out of the whole thing, and it's pulled right back on top of $3. The trick to making money in cannabis is to buy weakness. You cannot put money to work in these assets when they're running on stories that are hitting the tape. You cannot do it. If you're not in position already, when the story hits the tape and the thing's up 15%, you can't do it. So for me, it's a location trade. It comes down to a location, in this case, the 200-day moving average, and on top of the previous breakout. So what was resistance should be support. Hey, look, if it closes below 3, all right, I'll sell it. I don't care. It's not that we haven't had a couple of positions that we've taken losses on since 2020. We have. We put some money to work. We have a tight stop. We get out. But we've captured tops by buying weakness. I said to you, there's no way I can hold this thing if the small cap index is imploding. Okay, take a look at the small cap index. That's had a major recovery in the last 3 trading sessions. 3 big up bars, 3 white soldiers, they call it, back above the key resistance. It still looks ugly. Small caps look ugly, okay? But as long as small cap stocks aren't crashing, I can own small cap cannabis companies, okay? Because they're the smallest of the small cap. So I'm beginning to rebuild my position there. I haven't loaded up yet, but I'm seeding the portfolio with a little bit, see how it behaves. If it builds a base in here, makes a double bottom in here, probably seed it with a little bit more. These things should be their weakest into the end of the year, tax loss selling, whatever. If anybody's left with tax losses, I don't know. But sometimes the weak sectors get hammered in the last couple of weeks of the year. So it might come back down to 3, bounce around in here. On weakness, I'll build up my exposure to what I want and take it into next year. The lottery tickets that I talk about, call options on this thing, I've shifted out till March. So I took all my gains off the table plus, profits, and I had a little bit left, and I shifted that over to March. And I might shift a little more. I'll buy it on weakness. Okay. So that's the cannabis couch. Any questions you got, throw it in the comment section. I got to hop right now. Market's about to open. ARMR Insiders. I'll see you in a second. We'll get the live trading going. Our focus is to trade the S&P. And from that, we might look for other opportunities. I don't see myself getting aggressive the day before a holiday session. And I might be off the desk early. Depending on how the market's behaving, most guys have left by lunch. Okay. So there may not be any trading today, but we're going to start at 9:30. We'll see what the setups are, and we'll see if we want to get busy. Everybody else, you're on your own. I wish you all a wonderful Thanksgiving. Thanks for joining me on our morning meeting. If you'd like to be a part of the ARMR community, go ahead and take a look at armorinvesting.com. That's our website. Make sure you subscribe to our YouTube channel. And don't forget, we have a free Substack where we share our weekly updates and our research reports. So go ahead and subscribe there, armorinvesting.substack.com. All right, everyone, have a wonderful Thanksgiving, and thanks for joining me. Don't forget, at the end of the day, whatever I've said, what's your risk tolerance? Think about your goals, execute your strategy, and be the smart money.